Hey, everybody. Before we begin the show, I wanted to give a shout out to our friends at PowerPool. PowerPool is a mining pool and is one of the most profitable for miners. So if you have one miner at home or a fleet of miners at scale, point your workers to PowerPool to enjoy the best payouts. PowerPool supports a number of algorithms, SHA-256 for Bitcoin, X11 for Dash, and others. And of course, we're focused and we care about the most, S-CRYPT for Litecoin, Dogecoin, and now Bell's Coin, Merge Mining. Pointing your workers to PowerPool is easy with its simple user interface, and the platform also has all the reporting available that your operation needs. Typically, PowerPool extends a low 1% pool fee. However, if you register with the 84 million link in the show notes, you will lock in a sub 1% pool fee, which is excellent. Cheers, happy mining. Hello and welcome to the 84 Million Podcast. Today we're on episode number 31, and our guest today is Jung Kim. He's the CEO and co-founder of Lantern Finance, a US-based crypto startup that offers access to crypto-backed loans. Jung began his career in traditional finance, working with leverage lending at Capital One and Silicon Valley Bank. He was impacted by the BlockFi bankruptcy, which led him and his co-founders to launch Lantern and build a more sustainable or more secure crypto platform. That's what we want to talk about today. So, Jung, welcome to the show.
Yeah, thanks for having me, Kyle. Really excited to, be on here.
Glad to have you. And maybe before we talk about your product, what you're doing, and by the way, I'm not endorsing it. I'm not used this product. I've heard of it. I think it's exciting. This is not an ad. It's not paid for, nothing like that. This is a conversation between two people. And anytime you're building anything in the Litecoin space, we want to explore it. So that's what we're doing here today with Jung, and I'm grateful for your time and that you're showing up on the podcast here. So maybe before we get in, tell us a little bit about your story and background and inroads to crypto and all that.
Yeah, for sure. Again, thanks for having me on. Really excited to just be on here, and just to kind of kick it off my background. So I come from traditional finance. So after college, I started off my career at Capital One doing leverage lending. So basically, this is where, when large private equity companies wants to acquire smaller businesses to make it better, they borrow a lot of debt, right? So think about the mortgage, like in real estate, it's typically 20 to 30% equity. The rest is debt, right? So that debt comes from banks like Capital One and JP Morgan and Wells Fargo's of the world. So that's what I was doing at Capital One for a bit. Then I moved on to Silicon Valley Bank, doing the same thing, focused on leverage lending in the technology space, tech companies. Left before the whole implosion of SVB. But yeah, that's the end of my career. In terms of crypto, I actually got into crypto first in 2016. I was at the time still a student. I was interning at this venture capital fund in Korea, where they had me research Ethereum at the time.
Wow.
Yeah, got very deep into the rabbit hole as one does. That's how I found out about crypto in general, Bitcoin, Litecoin. So for me, the foray was actually ETH, not Bitcoin. At the time I, bought some Bitcoin on Coinbase, but didn't really do anything with it, right? I was scared of self-custody. Like, what if I mismanage my seed phrases? What if, it burns down in a natural disaster, right? Or, there's no recourse, right? There's no customer support I could just call and say, hey, can you help me get my funds back? Right. So I just left it on centralized exchanges like Coinbase, Kraken, Gemini's of the world, and just didn't do anything with my assets. Left it on there, missed out on the ICO boom, the DeFi summer stuff, because there were, frauds and rug pulls and scams left and right, even today, actually, right? So that was kind of how I managed my crypto until 2019, when I first found out about this company called BlockFi. Did my research. I even called them. They had really great customer support. And I just fell in love with the product. I became a super user, especially the ability to earn in kind on my crypto assets, as well as to borrow dollars against my crypto. So I don't have to sell and trigger capital gains taxes, but I can still access liquidity, right? Those are great. But, fast forward 2022, we all know what happened, right? BlockFi, Celsius, Voyager, Genesis, they all imploded. And that's when my, co-founders and I got together and we did a postmortem. Like how does this happen? Because to retail, they were saying we only do over collateralized loans. So how do you mess that up, right? If you have more collateral than the dollar you lent out. Turns out, as we all know in hindsight, they were taking borrower collateral as well as the earned deposits and lending out the crypto to crypto native hedge funds like Three Arrows Capital, market makers, other exchanges on an under collateralized or even unsecured basis. And that's crazy in crypto, right? As volatile as the market is, right? But even beyond, risky lending, they were taking, client assets and doing some risky DeFi yield farming with it. I think Celsius was famous for that. BlockFi did the infamous the Grayscale Bitcoin Trust arbitrage trade with client assets and lost, I think, around $100 million, maybe more. And so we realized, wow, what a crazy way to run these businesses. And so my co-founders Prince and Degi, we got together and we found a lantern to build this the right way.
Yeah, that's interesting that you mentioned Celsius and BlockFi. And you're in LA, I believe. When I was using Celsius, I was in your area. I remember it distinctly. I want to say it's 2020. And I remember the first time they went down for maintenance and my crypto was locked up and I couldn't withdraw it for a few days. That terrified me. It turned out to be legitimate, but that was enough for me to pull everything off and say, okay, this is enough. So I wasn't burned by that event as others have, unfortunately. But just that was enough to scare me. Yes, you're correct. You do need to be responsible with your coins, not your keys, not your crypto, is true. Right. So you got to secure it if you're going to have self-custody. But I remember that time period very clearly. So it sounds like you and your co-founders learned from this. You were directly impacted by this. So I guess maybe we'll just dive into it. How are you different than these? Because we're scared. I mean, I'm still remember, like, I would never want to do that.
Yeah, you're a wiser man than I and millions of others. Actually, in my case, I had an opportunity to get out, right? So I was at BlockFi. There was an initial scare in, I think, June of 2022 when Celsius and Voyager actually went down. Yeah. BlockFi had a lifeline from FTX, which turned out to be fraudulent. And then a few months later, everything really, imploded, right? Yeah. I was, just foolish in hindsight, just leaving my assets there. So that it is on me, but
well, it's not just is it on you? I mean, I think it's what they were doing. I mean, it's a partnership. I'm not going to blame it was amazing. We've never seen anything like that. Obviously, it's going to attract you and pull you in. I thought it was amazing. The stables, they were paying like 14%.
Yeah.
And I think Litecoin and Bitcoin was 8%, 10%. I don't remember anymore, but I mean, you couldn't find anything like that. And the idea that this was treated kind of like a bank, hey, I'm getting interest on but how it was working behind the scenes is very different. So, So I will say, one, if you can do that successfully, soundly, without all these risks, I think that's a great product. And maybe that's, again, why we're talking today. But I can't blame the user. It's kind of both, right? It's the mismanagement on the part of the organizations.
That's fair. That's right. And, and FTX, who knew it was just plain fraud, right? They were cooking the book, their accounting books and whatnot. But yeah, to answer your question, how are we different? So we're different because we do less, right? We're different because we don't need to become a unicorn, $1 billion plus company in 3 to 5 years. We want to exist for the long run. We want to exist decades from now, centuries, if God willing, right? We want to do this right. Yeah, God willing. And so basically, the only part of those platforms that worked were the over collateralized loans, because you can't mess that up, right? As a sound lender, even for traditional banks, which most people in crypto might not like, but they are a key part of the world's economy, right? And the way they're sturdy and strong is because typically, not always, typically when a lot of the loans that they make, whether it's for real estate, whether it's for commercial businesses, typically the collateral is worth more than the loan that they give. The bank needs to be sturdy for no one else to get hurt, right? So in our case, we only do over collateralized loans. And when borrowers borrow against their crypto with Lantern, unlike those previous lenders, we don't lend it out to anyone else. We don't use that to arbitrage gains and trade in DeFi or whatever. It's just sitting in cold storage, or if it's a stakeable asset, we stake it natively. No, like real staking for ETH and Sol or other, relevant assets. Even the staked assets are in cold storage. And we use BitGo as our custodian. BitGo is for those who aren't familiar, they're a qualified custodian, which is a legal designation based in the US. They manage, I believe, over $100 billion in assets for institutions as well as high net worth individuals. And we use our cold storage, which is insured up to $250 million. So, and that, where the collateral is held, it's with BitGo Trust, which is a South Dakota trust company. It's bankruptcy remote as well. So even if something happens with BitGo, we have access to our clients' funds, our funds, right? That's how we're different. The risk management aspect.
So I guess I would have two questions. How do you over collateralize? Like, give me an example. Like, let's say I want to take out. Well, maybe you can talk about that too. Are there minimums? Are there maximums? What does your loan structuring look like? I guess.
Yeah. No. Great question. So right now, we started off with supporting Bitcoin, Ethereum, and Solana, and we just added Litecoin support yesterday.
Yeah, absolutely. Yeah.
I don't know when the recording goes out, but we just announced it recently, and basically, let's just take Bitcoin loans as an example, right? We lend up to 50% loan to value. So let's say you have, for easy numbers, $100 worth of Bitcoin. We'll lend you up to $50. We could do that straight to your bank account via wire, or we could send it to you via stablecoins up to you as what you're preferring. Let's say that the value of the crypto goes down because crypto is volatile, right? And that so if the price goes down, the loan to value ratio, which was 50%, will go higher, right? Because they're inversely related. So if the loan to value goes up to 65%, we'll issue what is called a margin call. And what that means is it's just a warning saying, hey, client A, you might want to post additional collateral or pay down the debt a little bit to get that, add more cushion so that, your loan is safe, right? Let's say, a few days passes, the borrower chooses not to, go with the margin call, and loan to value goes to 75%, right? At that point, we do have the legal right to liquidate the collateral to protect ourselves. And even if we get there, we would only sell the portion of the collateral to pay down our loan, and then the rest remaining will be sent back to the borrower, right? But how we're different from DeFi and other platforms without any customer support is we will work with the client. We'll call you, we'll email you, we'll text, whatever we need to do to make sure you're aware that your loan is a little bit in danger. And as long as the borrower is in communication with us saying, hey, my funds are on the way. Hey, I need to wire my funds, but it's a weekend. Can you give me a few more days? We'll work with you, right? Of course, if there's another volatile move and it goes up to, let's say, like 85, 90% loan to value, then we have no choice. We have to protect ourselves. But that's kind of how it works in a nutshell. And real quick, I know I mentioned in the Bitcoin example 50% LTV. For Litecoin, for Litecoin, we just added support for it. Initially, we will lend up to 25% of loan to value, which means for every $100 worth of Litecoin that you have as collateral, we'll lend you $25. And I actually saw in some of the responses when we did the announcement on Twitter, why is Litecoin being treated differently? It's a sound asset. Arguably it's better than some of these other coins that you support in various aspects.
We like to think so. Yes.
I'm with you actually. And I'm a recent reconvert to Litecoin. Yeah. I actually first found Litecoin and bought some in 2016, 2017. I never unfortunately held. Yeah. And I just didn't know. I forgot about it. And I could go into how I rediscovered Litecoin myself later. But for the past 8-9 years, I didn't realize Litecoin was still around. Mm-hmm. And when I did some more research, over the past month, actually, I was blown away. Vibrant community and just and it's doing well, right? But to answer the question on why Litecoin LTV is much lower initially, it's because to be fully transparent to our clients and to the viewers here, the way Lantern works is we borrow the dollars to lend at, right? So when you come to us, you fill out a loan application on our website and you submit it. When we fund that loan, that cash that we lend you, we borrow that from credit funds, small family offices, higher net worth individuals who have extra cash that they want to earn yield on. And that's how we do the loans, right? For Bitcoin, Ethereum, and Solana, just as a function of how the market has been and how they've been relevant, more so in the mainstream media for a while, our lenders are more comfortable with them, which is why we were lending up to 50% LTV. Litecoin, my co-founders and I and our team, we were blown away by how strong the engagement and community still is. We're sold, which is why we're supporting it. But our lenders that are more institutional, they're not as comfortable, which is why we're starting with 25% LTV. But now Litecoin is on their radars. They didn't know about it either. They thought, oh, I didn't know it was still kicking, right? But now they're aware of it. And as we show them, hey, like Litecoin is actually, it's not more volatile than ETH or Sol. It might actually be better than ETH or Sol in certain respects. And as they see that, I'm sure they'll get more comfortable, and we'll be able to increase the LTV levels to 50% as well as time passes.
That's thanks for sharing all of that. I think it's neat that you have this unique opportunity with what you're building to actually have those conversations with people about Litecoin, because they're not going to be listening to the 84 million podcasts. They're not going to be on X. I mean, some of them are. A lot of us are on X, right?
I'll be sending this recording to that. So help.
Well, fair enough on that. But it's a neat thing that you are able to communicate the benefits of Litecoin and its resilience, that it's, now I'm going to preach a little bit, it's never been down, in 13 years, almost 14 this fall.
100% uptime.
100% uptime. So everything Bitcoin has, you have in Litecoin other than the NGU factor. Okay, that's Bitcoin's alone. No other asset in the space has done that. And there's a lot of opportunity here to go there. But I'll just add to your statement, they're not as aware of it, or they're not as trusting of it yet, maybe. Yes. And that's an interesting thing where you can actually share with them. And you can also see what the demand is for Litecoin. I have no idea. You announced it yesterday, but I think it's pretty amazing. We like to talk, like I said, to anybody that's building or using Litecoin. So good stuff here. So ETH, Sol, Bitcoin, and Litecoin so far. You kind of shared about how the lending and loaning process works. What about minimums, maximums, turnarounds, timeframes? Do I have to have a limit of X amount of dollars or X amount of Litecoin? How does it work?
Yes, another great question. So basically, we have like a minimum of $1,000 in borrowing amount. So for Litecoin, you'd need at least $4,000 worth of Litecoin to borrow that $1,000, right? So that's the minimum loan size we'll do. In terms of maximum, there are no maximums. So if someone wants to borrow like six figures, let's say 100K worth of 100K in dollars, backed by 400K plus worth of Litecoin.
Yep,
we can do that. More, like there's no maximum. In terms of how the process and the turnaround speed, basically you submit a loan application. It really depends on how you want to fund disbursements, right? Our real value add, I would say, and the differentiator is we can lend against your crypto straight to your bank accounts. So you don't have to borrow in DeFi, like, in stable coins, and then move it to a Coinbase, to off-ramp, nothing like that. We'll wire directly to your bank account, right? So that means, let's say you submit a loan application on, Wednesday morning, let's say, right? Potentially, if all, everything looks good, we'll be able to wire the funds to you that same day, right? But let's say it's a Friday evening when you submit the loan application and you want the bank wire. It's probably going to arrive on Monday then, right? Because we have to rely on actual banks to do that, and they're not like crypto where they're 24/7, right? If you want to borrow in stable coins, which we support, one of our borrowers actually, borrowed against our Litecoin and requested in stable coin, right? Do like if they're like USDC on ETH. That one we did that same day as well because we just were able to. So it's up to the borrower, but then typically we fund same day or 1 or 2, 3 days after.
It's a pretty fast turnaround. Any special approval processes to trust the person, or is it just as long as you've got the 1 to 4 ratio of Litecoin, you're in?
Yeah. So in terms of vetting the right individual, yeah, exactly. In terms of vetting the individual, we're looking to do this like properly, right? And we want to exist for the long run. And our team's thesis is the way to do that is to comply with regulations in the US. We are a US based company. We're a Delaware C Corp. And we're registered with FinCEN as a money services business. That means we do have to do KYC and AML checks. Most clients, they don't see that, they only see the KYC aspect, right? We try to keep it as light as possible. So like name, like legal name, date of birth, social security number, address. We'll need to collect that. Make sure you're, a real person that's not flagged by the US government for anything, weird, right? After that, it's really just the collateral. Like your crypto is your credit. There's no credit checks. There's no extensive paperwork. No back and forth. It's basically, after you KYC and all that, you just sign a review first, obviously, and sign a loan and security agreement, which outlines all the terms of the loan and, like the loan to value stuff. Then we're good, basically.
Okay. In terms of length of loan period, I mean, are we talking 1 year, 5 years? I mean, how far out do you go if somebody wants to borrow against their Litecoin?
Yes. So all of our loans, whether it's Litecoin or Bitcoin, we do 12-month terms, so 1-year loans. If you wanna, after the 1-year term ends, clients have to choose to refinance their loan or pay it back. It's up to the borrower. But let's say someone wants to pay back early, they could do that too. There's no prepayment penalties. Just on pricing real quick, we do charge a 2% upfront fee on all of our loans. That's just basically paid out in the beginning. So let's say you want to borrow, again, for sake of easy numbers, $100. We'll basically wire you $98. The $2 is the upfront fee that we'll keep, and that's the only fee, like that'll be part of this whole loan process until the maturity of the loan. You could pay back earlier. There's no fee. There's no other hidden fees besides, just that upfront fee.
Okay.
And the interest, obviously, right? Very
good. And people would go to lantern.finance to discover what you're doing, apply for a loan, things like that.
Yeah. So you go to www.lantern.finance. That's our website. You could create an account and submit a loan. There will be a little button on the top right, submit a loan application. You click that. You can design your loan, pick Litecoin as, I think right now, because we just launched Litecoin, it's actually the default on the top. So you borrow against your Litecoin, type in however much you want to borrow in dollar terms, and it will calculate for you the minimum collateral needed, how many Litecoin you need to put up. If everything looks good, click. You could review your pre-approved then, summary of terms, and then just fill out the KYC information, review and sign the LSA. Then you're done. You send the collateral into our BitGo cold storage wallet, which is insured, and once it's approved, we'll wire you the funds.
Got it. Maybe you can comment a little bit about regulation. And this is nothing that I'm expert to at all, but you're setting up, your organization. You are looking to be in compliance with your jurisdiction. Yeah. I would imagine, well, you said Delaware, it's not California. So, but United States law. I mean, how does that space even look right now? Is it mostly gray? Are you finding more clarity? I mean, I'm sure it's a challenge to navigate all that.
Yeah. So frankly speaking, so we started building Lantern in actually exactly 2 years ago, March of 2023. That was the depths of the bear market, and also not just in terms of like market conditions, but regulatory conditions. Gary Gensler, he's infamous in crypto as he was a former chairman of the Securities and Exchange Commission, the SEC. Very, indiscriminate targeting of good actors within crypto.
Yeah.
Unfortunately, there's a lot of gray area in regulation, and I think the previous administration kind of used those gray areas to say, hey, you are not in compliance with this, that, and that, so I'm going to go after you, right? Currently, after the election of the new President Trump, and the new SEC chair, and it's a completely different, I think, regulatory environment. A lot of things are still gray, but as you've been seeing, as everyone's been seeing on the news, SEC under the new leadership is dropping the charges that Gary Gensler's SEC has been litigating, right, one by one, almost every single day. I think last week, like 5 or 6 different companies had their lawsuits drop. So we're seeing that things are getting a little bit better. But for us, even if that wasn't the case, we are very conservative in how we have like structured our company and how we structure our loans, how we manage client collateral. So, we weren't like that concerned even while we were building in the hostile environment. And now I think it's just a clearer path, frankly.
Is the lending environment happening mostly in the DeFi space? I don't use any of these services, at least not at this point in my life. I was aware of the Celsius, I was aware of BlockFi, all that, and they've been kind of liquidated and kind of burned pretty bad. I mean, are you kind of alone building this, or are people starting to kind of return to this idea? How does your space look?
Yeah. So BlockFi, Celsius, Voyager, and Genesis, like those are the big ones. After they were kind of wiped out, there was a massive gap in the space, right? Excuse me. The only place people really had like left to borrow against a crypto was DeFi applications. To your point, like the Aaves of the world, or each different crypto has their own DeFi like lending and earning platforms, right? Litecoin, from what I understand, doesn't, because it's not like smart contract based. Correct me if I'm wrong. Right? So
there's some developments there within the last 6 months. I've not used it, but they're starting to get into that, or at least have the capacity to. But I'll leave it for this conversation.
Even for DeFi protocols on other chains, I'm aware that you might be able to wrap your Litecoin and participate.
Yeah,
but that's not real. Like, again, we tend to be more conservative in how we operate. Conservatively speaking, from a tax law perspective, wrapping your Bitcoin, wrapping your Litecoin, wrapping anything might be considered a taxable event, right? It's as if you sold your Litecoin for another asset, because it's not 1-to-1, it's 1-to-0.9999897 Litecoins, right? Because there's a separate market for it. So again, it's a gray area. Consult your accountant or CPA. Don't just take it based on what I say. But my understanding is that if you are a little bit more conservative and you want to be careful, wrapping your asset is considered a taxable event, as is a lot of activities in DeFi, right? So, that's what people had. And also in DeFi, you need to self-custody, which I know is the gold standard. And in crypto, that's not your keys, not your coins. That is accurate. But the vast majority of crypto investors today aren't ready to be their own bank. They're not ready for self-custody. I've been in crypto since 2016, as I mentioned earlier. I'm still scared of, self-custody. Every time I want to approve the transaction, I get heart palpitations, before I even had Lantern, right? And I think a lot of people would, kind of like empathize with that, right? But not just that. In DeFi, there's very variable rates. One day you could be paying 5% interest, is very good. But the next week, like for example, in November or December after the election, on Aave, borrowing rates for stablecoins were like 35%, 40% for a while. It's volatile, right? So that's why we stepped in to offer fixed rate loans traditionally. Again, we custody. It's not Lantern's custody. It's in Lantern's name, but it's not us building our own custody option. We outsource that to a business that solely exists to custody crypto assets, BitGo, right? Cold storage, again, insurance up to $250 million. And so that's kind of, how we came into the fold. There are, from what I understand, maybe like less than a handful, maybe 2 or 3 other centralized lenders out there that offer loans against crypto like we do. But again, my understanding is they're a little bit more, even more conservative in the sense that they only offer loans against like Bitcoin and ETH, maybe. But I do believe we are the first to support Litecoin, and we're proud to be so.
Hear, hear, amen. That's cool. Interesting stuff. Let's talk about taxes, because you made an interesting comment about taxes, taxable events, things like that. And I am not a CPA either. I don't work with the IRS. I cannot give you taxation or filing advice of any kind. Okay. But we're all aware of these kind of the looming taxable event. What is it? What is it not? And that can be very difficult. Hopefully there's more clarity on that going forward. But in terms of taxable events, borrowing against my asset, or let's say I open up a loan with you, I give you my Litecoin, is that a taxable event?
No, and that I could say with certainty. So borrowing in any, for example, if you take a mortgage, right, to buy a house, you're borrowing from the bank and you're using that money to finance the purchase of the house, right? Mm-hmm. You don't pay taxes on that because you owe it back, right? Like that's in the context of a loan agreement. The U.S. government does not consider that to be a taxable event. Yep. And that's the beauty of loans. We're all bullish on crypto here, and everyone here is bullish on Litecoin, as am I. I'm a not a big investor, unfortunately, but I very much would prefer Litecoin to succeed in the markets, right? So I've my Litecoin and I want it to grow. I'm not ready to sell this for short-term capital gains taxes or long-term capital gains taxes just yet. There's a price I haven't targeted my until it hits that. I don't want to sell it. But what if I need cash to, let's say I want to buy more Litecoin because the markets are getting crushed, this week, right? Like I think Litecoin, there's a huge discount. You might want to buy more Litecoin. You might want to diversify and buy, stocks or finance a real estate purchase, right? Or you might just want to pay down higher interest credit card debt. Whatever it might be, if you need liquidity and you don't want to sell your assets and trigger capital gains taxes, that's where Lantern comes in. That's where we can really benefit you. Long story short, yes, it's not a taxable event.
Yeah, that's actually a pretty significant aspect of this. And I think, at least I'll speak for myself, I'm more like the old days, you buy or you get your Litecoin or Bitcoin or whatever, you buy it, you can hold it, you can spend it, you replace it, but they're all kind of in and out in the traditional kind of, this is money, it comes in and out of my pocket. But those are taxable events. So seeing that you can get fiat liquidity, I'll use that language, without a taxable event is pretty cool. So very interesting. Curious about your name, Lantern.
Yes.
Any insight on that? You have to have.
Yeah. Yeah, well, I mean, it's okay. Yeah, it might be a very corny or cringy story, but long story short, when my co-founders and I got together and we had this idea for Lantern, we needed a name, obviously, and it's hard to come up with names, so I was just walking around my neighborhood for a while, and I like to walk a lot. It helps me clear my head, and it was like late at night in the evening, and you just see a bunch of lanterns and like people's houses, right? Like, and I'm not talking about the old style lanterns, even just on the lawns, for instance, right? And it just made me think like it's a nice symbolism, right? Again, this was the depths of the bear market, not just the markets, but regulatorily speaking, and just society at large. If you were in crypto, you were looked down upon, ridiculed, and of course, I look at all this fraud. It was just a dark time in our industry. Mm-hmm. And it was because of it was because of a handful of bad actors, frankly, right? And so we wanted to be kind of like the light to really lead the industry in the right direction, right? And that's where the name came from. We want to be like a lantern guiding the industry forward in a way that things are run properly and risk management is taken care of. Because as they say, if you manage the risk, the upside, everything else takes care of itself.
I was curious because clearly Litecoin, illumination, lanterns, I don't get any of that from Ethereum, Bitcoin, or Solana. Now, Solana, you're kind of thinking of Sol, the sun, baby. We could kind of go that way. But, and granted, we're LITE, the light version of Bitcoin, but we're also light. We think about these things and these names. So I was just curious about that. Good name, good brand.
Yeah.
Thanks for sharing that. I don't think we talked about bringing that up. So I appreciate that.
Yeah, actually, we were speaking with
names are important.
Yeah, names are, and so we were speaking with one of our investors about hey, wow, look at this. We didn't realize Litecoin community was still kicking and screaming, and they're so powerful. Did you know? No. And then and that investor was talking with other people, and we were there. It's not ETH Denver, and he was saying, hey, yeah, dude, did you hear about the Litecoin guys? And I was like, oh, you mean Lantern? Yeah, people kind of mixed up Lantern for Litecoin there. Yeah.
You got an association. Well, I like what you're doing. I appreciate you sharing all of this with us. Maybe before we close, just give us a few comments on the Litecoin community, kind of how you rediscovered all this and kind of your recent vigor. So
Yes. So, as I kind of mentioned before, for the longest time, speaking for myself personally, actually, as well as my co-founders, we didn't realize Litecoin was still around, right? They call these like, Dino coins, right? Like XRP, Hedera, like there's a bunch, XLM, right? We didn't really think about them for a while. But, there was one client who we actually reached out to him first because we thought that this person might be a good fit for our loans. And this client mentioned, hey, like, I'd really love to borrow against my Litecoin. And we didn't support it, but you know what? We can make it work, right? And then maybe it was my search history or something, but like all of a sudden on my X or Twitter feed, bunch of Litecoin stuff is coming out. And also we are hearing that there might be a Litecoin ETF coming out. It's already been filed. Now it needs to be approved and actually let's launch, right? Whether it's because of that or something else. But as I start to engage more and more, I started posting about it, and I'm seeing, a lot of engagement from Litecoin folks. And I didn't know this community existed, right, for the past like decade. And I was blown away, as were my team, as well as, our lenders and investors. And I was like, wow, okay, let me, like kind of dig a little bit deeper, right? And I realized, okay, like it's a fundamentally sound asset, right? It has all the good properties of Bitcoin, but it's never been 100% uptime. Transaction fees are, I think, on average, a cent per transaction.
Less than a penny. I think the higher end in history was like 2 cents. Yeah.
2 cents. Phenomenal.
That's the upper limit of extreme fees. Yeah.
Yeah. And as I mentioned, my first foray into crypto was Ethereum, right? Every time I move my ETH, depending on, obviously the demand for block space and whatnot, $10, 20, at one point I paid $80. Yeah. Just to move, you don't see that with Litecoin, right? It's just easier to use. You could use it for payments. You could use it for obviously store of value like Bitcoin. It's a fundamentally sound asset that's easy to use, right? And I'm just kind of tipping back into, and also, one thing I didn't want to mention though is like there are a bunch of, crypto assets out there that are fundamentally great, technologically great, but if there's no adoption, it's meaningless.
Yeah,
you can have the best product, but if no one uses it, it doesn't matter, right? That was my understanding initially of Litecoin. But when I realized there's a huge community around it still, and these are you can't even use the term diamond hand for these people because it's been over a decade. It's been multiple cycles, and the strength is still there. It blew me away, and that's kind of why we decided to support Litecoin, and we're just really bullish on it as a team.
Good deal. Yeah, I think Litecoiners are pretty resilient people. We lose people, we gain people. I think we're going to gain a lot more people. We already have, I think, since Intern took over the Litecoin account a few months ago.
Oh.
But we've been very strong. Obviously, I had nothing to do with price, right? But I can just kind of observe like anything else, in the space like where are we at? And I think there's just a lot of the metrics are all in Litecoin's favor. The hash rates through the roof. You've got a lot of community engagement. You have the historic reliance of the chain. It's never gone down. But yeah, BitPay stats are been number one, and it's not even close for more than a year. So, like you said, people are using it. So I think there's a lot of cause for Litecoin, and I get to be a part of voicing that. That's why I do this podcast.
Yeah,
we're not the Litecoin Foundation. We support the Litecoin Foundation, which, by the way, they're going to have a summit in May. Will you be there in Las Vegas?
Yes. So actually, you mentioned earlier, Kyle. So I was in Los Angeles. So I was with. Long story short, I just got married. I was building Lantern out of my. Appreciate it. I was actually working the East Coast, moved back to my parents' place to build Lantern because in the startup and need to cut costs, obviously. After I got married, August decided to get kicked out. And, that's when we moved to Vegas, actually. It's actually really nice. When people hear Vegas, they think of just a strip, but the suburban areas are very quiet. Cost of living is much more affordable.
Oh, yeah.
It's a great place, frankly. So I'll be here for the Litecoin conference. I think it's May 29th to the 30th, I believe.
Yeah.
Right.
Litecoin.com/summit.
Yes. yeah, so I'll be there. Really looking forward to meeting other Litecoiners and supporting, however I can.
Yeah, that's great. I think we've covered it. I think this is a good conversation. Anything you want to end with before we kind of close the show out?
No, just really appreciate you having me on. Just really honored to be on here, and just I really want to thank the viewers and the Litecoin community for really just um, embracing me actually and Lantern. At least on social media, it's just been a flood of just engagement and love and support. And so we're very proud to support Litecoin as a collateral. You could borrow against it if you want, if it makes sense for you. And so if you ever want to get in touch, have any other questions or any feedback, feel free to message me directly on Twitter. It's Jung Kim 312 or Lantern5. My email is my first name, Jung, Jung, at lantern.finance. So yeah, please don't hesitate to reach out with any questions or any comments. Thank you again.
Amazing. And yeah, I will echo that. Thanks for everybody who's tuned in today to the 84 Million podcast. Of course, you can go to 84million.com/podcast and see this episode and every other episode we put out. We're also on YouTube. We appreciate all the subscriptions there. And of course on X. So wherever you're finding us, we appreciate you. We thank you. And Jung, it was great having you. Be well, and we'll be in touch.
Sounds good. Thank you so much.